We are back for our fourth and final day of DC Fintech Week, where we will be going where no Fintech conference has really gone, delving deep into the question of equality, into inclusivity, and where Fintech can raise its game to speak to the great moral ambitions of the industry. And it's hard to imagine a better group of people to help us explore the issues. Now, before I do, I want to give a special thanks to Visa, who has been extremely supportive in getting this particular conversation up off the ground. And I also want to thank our participants this morning. We have Kabir Kumar from Flourish Ventures, Chinedu Enekwe from Affinity Venture Capital, Theodora Lau from Unconventional Ventures, and Adrienne Harris, professor of practice, and we're at the Center of Finance, Law, and Policy at the University of Michigan, and a fintech entrepreneur extraordinaire. Thank you so much to you all for joining us today. I think I'm going to kick it off with just the question of money, particularly when it comes to capital and the state of capital in venture capital. Theodora, I guess I'll start with you. I mean, what's the state of Black funders prior to the crisis? And for that matter, really diverse sources of capital. Was race and diversity really given much thought beyond just the headlines? And what did it mean when it came to actually doing deals?
That is a complicated question to tackle on a Thursday morning, but it is just that, talk. I think I'll sum it up with that. We have seen a lot of talk. We hear a lot of people talking about diversity matters, Black Lives Matters, all of this matters. But at the end of the day, what matters is if you actually get the check, right? And unfortunately, venture investing, by and large, is a trust business. And so entrepreneurs tend to work on things they're familiar with. VC tends to fund people they're familiar with. And so with that set up, we are challenged and biased to begin with. So when we talk about data, one recent data point that came out from Crunchbase is that Black and Latinx tech startup founders have made almost zero progress in the last 7 years, despite everything that we are talking about, right? They got 2.4% of VC investment. And it's been like this, it stayed flat. So I think there's a whole lot more work that needs to be done. However, I would like to end that with an optimism note. Is one of two initiatives that recently started, one from JP Morgan and another one from MasterCard. So JP Morgan Chase, they announced a pledge of $30 billion recently. And Arlen Hamilton did an amazing analysis of exactly where that money is going. And I think it's worth of thought. So for example, they're putting money in to promote affordable housing and home ownership for underserved. They're allocating $2 billion for business loans for Black and Latinx entrepreneurs. As we know, that is important, right? Because they need the connection. And then on top of that, they also don't have as much of an asset transfer from generations. And in addition, JPM is also working on improving access to banking in Black and Latinx communities, because a lot of them, they are in what we call the banking desert, if you will. So that's one initiative I am very hopeful about. The other one is MasterCard, which they've pledged $500 million over the next 5 years to expand financial inclusion. And not just that, not just providing tools for them to bank, but also looking at how to increase the capital for Black-owned businesses. And so time will tell how effective those are, but I am encouraged that at least they're not coming out and giving crumbs, which is always my point, right?
Yeah, I guess that's a really interesting point. Whenever there is a kind of a social issue of the day, I mean, industry can sort of want to get involved, and it just sort of depends on what the social issue is in terms of really how directly people feel that it impacts their own lives, how directly people feel that it impacts their business. Chinedu, I mean, when you think about venture capital and given your experience, I mean, a lot of this was catalyzed by really the brutal murder of George Floyd. how much did you see that event as catalyzing change, sort of structural change in the industry, and or do you see whatever changes being made as mostly virtue signaling, a means for venture capital and other firms to sort of enhance their profile? Or do you see that there's some acknowledgement that they can play a helpful role in what this event and what the protests afterwards have tried to communicate?
That's a complex question, but thank you for asking me and having me here today. I think one of the major things that I have seen prior to George Floyd and after is an acknowledgement that there should be a leveling of the playing field in terms of where the capital that is allocated goes. So there's been commitments, like Theo said, with new capital being deployed, and I'm encouraged by that. And there's a wider lens given to how capital should be deployed. So 2 founders, Google for Startups, recently doled out about $50 million to, or 250 startups, they've doled out money. And then also PayPal and a host of other initiatives, along with Living Cities, have now taken up backing fund managers that are of color, or Black and Indigenous and people of color. So there's a recognition that you have to sort of create an entire flywheel, from the fund managers to the initiatives that support fund managers to the actual startups. But one of the things that I think that is underreported in this whole scenario is, prior to George Floyd, the statistics kind of, when you hear 2.7%, or you hear the percentage of people that are Black that have received venture capital, it doesn't really drive it home as to how small the number actually is. Because when you look at it from the number of people that actually have received venture capital, that is less than 400 over the 60 some odd years of venture capital. Less than 400 Black people have received venture capital funding. It's very hard to even imagine that you would be able, in an industry where we normally pattern match and leverage relationships to continue to pattern match, it's hard to imagine that in under 400 transactions or deals, that you would create enough of a sample set that would allow you to pattern match that Black founders and investors are actually a good bet. And that's one thing that I don't think, even in the wake of this VC after George Floyd, that the recognition hasn't been that when you do invest in people of color, it is a great bet, just like any other investment opportunity. And when we get to that point where an investment decision made into a woman, a person of color, or the average non-underrepresented founder, that there's not a second guess. And I think that's probably what I think is missing in this moment.
That is such an interesting and important observation. I've done a little bit of research myself on the regulatory side, sort of looking at the diversity of Blacks as financial regulators. And one of the sort of really amazing or interesting and depressing sort of aspects of that research is, when lots of people were asking, well, that must have been really difficult. And I said, no, it's actually quite easy, because the numbers were so small that I didn't even have to do any advanced, I didn't have to run, there wasn't enough data to even run regressions on. So, I mean, it was literally just a question of how do you start to collect data? And what you're saying is that even when you move into venture capital, the numbers are so small, both in the aggregate numbers and also when you look at participation in deals, that it's hard to even present the value proposition, because you don't even have the data against which you can make those or make that argument. I mean, because in effect, exclusion has been that significant. Adrienne, please. Kabir, yeah.
What you're saying and what Chinedu was just saying in terms of the numbers being really small, that really sums up how systemic and how baked in the problem is, right? And that's really fundamental here. We at Flourish, we were actually set up, we built this fund to address the inequities that exist in our financial system. We have a set of fair finance principles. Long before any of these crises came upon us, we recognized that these were the challenges that existed. And we pride ourselves, 50% women, 25% Black, 60%, diversity across all frontiers. But after I like this panel's question, the headline question, because after Floyd, we recognize the systemic nature of the problem we are facing and how we are part of that system. And instead of doing the sort of natural thing, we all wanted to do stuff right away, start backing, founders, start getting out there and building these businesses. We decided, let's be honest with ourselves. Are we part of this systemic problem? Can we look inward? And I think one of the other things that's happening, I don't know how widespread is it in the VC world, are firms looking inward, are saying, look, are we getting this right? We know we're not getting it right. Why are we not getting it right? Is it simply because we don't have those individuals on our team? Is it more than that? And so we are actually taking that kind of I hate the word audit, but we are taking that kind of an audit internally as a firm, going through that, because I suspect that's another thing that's happening in the VC world, although I'm not completely aware of that.
Well, I will say that Flourish has really been, I think, out front on this issue in ways that frankly, not all VCs have been, and for a number of reasons that we can get into. But Adrienne, I want to also sort of follow up on this point of the value proposition, right? Particularly when you're operating in a world where there is little data, precisely because the barriers have been so extensive. When you think in terms of just your experience in the space, maybe you can just sort of talk us through, what is the value proposition of having Black people in venture capital?
Yeah, absolutely. Well, I think, the point is very well taken, very well made, right? If you don't have the data points to make the case, you can never make the case. And here you are in this vicious cycle. But we do have interesting data points from other industries. And there's plenty of science about diversity on boards, diversity in executive teams in other contexts that I think we can take and move over to the venture world. But if the premise of venture capital is make a bunch of bets to the most promising entrepreneurs, right, for the best ideas, we know, again, based on science from other areas, that doesn't just exist in geographical areas that are on the coast. It doesn't just exist at Stanford or MIT, right? It doesn't just exist with cis, straight, white men, right? We know this from other data, and we can apply this in the VC context. And frankly, there's no other industry that's better set up, right, than this risk-seeking, make 100 bets industry to try and test this theory out, right, in this new context. These people are perfectly situated to do it. And because of the ecosystem problems that everybody else has pointed to, they haven't had the opportunity or haven't done that yet. And so I think it's really incumbent upon them to do that.
You're making a number of very useful observations. As you said, for example, McKinsey has done, a set of very well-published sort of reports on what is the impact of diversity on boards, both in, there's been research done both in terms of the gender diversity, in terms of racial diversity. And the idea is, after, multiple studies, is that, having differences of perspective and ideas makes you more efficient and helps you to frankly become a more profitable company. When you think about what venture capital does, and I want to actually circle back to Kabir for just a moment, when you think about what venture capital does, right? What do venture capitals do? It's not only that they deploy capital, but they also sit on companies, and on their boards, So what does that mean in a fintech perspective, and what does the value proposition of diversity mean there? And then we'll go to Chinedu as well.
I think it's huge. I think, by the virtue of our board role, we can drive decisions in companies, especially early stage companies where they are the beginnings of establishing their culture. I think we can play a pretty significant role. It's one of the things we've, as a fund, implemented. Chris, you've met our head of human capital. One of the things we wanted to do was make sure that we were really focused on culture and not just ticking boxes. So there's the C-suite and the board level, is there diversity? But is there diversity at every level of the company? And then how is the culture absorbing those people, interacting with those people, functioning as a cohesive unit? This is very hard to do. And I think by the virtue of being on the board and having this kind of function, I think we can play a big role. And especially in early stage companies, because they are the big companies of the future. If we can establish that culture from the beginning, from the ground floor, I think it can have a huge impact overall.
Yeah. Just to double down on what Kabir said, the culture really, the value of having a diverse person, whether they're a woman or person of color or Black person on the board at the early stage, helps founders in the fintech context to identify their blind spots on one side of the market opportunities that they are going after. Because oftentimes I've experienced it, founders don't know what they don't know. They don't know how a community might experience copy or the marketing that they're sending out. They don't understand it. It's sort of like the old adage around ketchup. You know, some people keep it in the cabinet, some people keep it in the refrigerator, and the cultural context actually matters when you're marketing people to get them to do it. So that's one. But then there's another aspect in terms of team. Their culture really matters, where you have a diverse person on the board. It helps you at the early stage recruit some top diverse talent, whereas sometimes you wouldn't be able to get people because they are unsure about your team in any ways. And that's where a diverse person on the board can actually be a very strong asset, where you might be able to punch above your weight in terms of who you're able to bring in because of the culture that you're able to sort of signal by their presence, and then them helping you recruit that talented recruit.
Well, I think to Chinedu's point, right, all of this stuff snowballs. So if you have a diverse board member, that person can help you recruit diverse executives. That same board member is now interfacing with the investors on the board, who are likely not women and not of color, right? And getting a window into their world, right? And maybe starting to invest, maybe becomes an LP in one of their funds, right? And so it goes back to this point about ecosystems. It really just is about starting with this basic blocking and tackling, and then not just relying on the diverse people in the room, right? But once you start to get that one woman or one person of color, that first one, I should say, not the only one, the first one on the board, in the executive team, in the partnership ranks of the VC, right? Then this stuff starts to snowball. And it is a little bit of a double-edged sword, right? Because we do often rely on the woman, on the person of color, then to do all this other work, right? And we sort of leave it to those people to carry the laboring oar on these things. But you know, that is unfortunately where it starts and how progress starts to get made.
And to that point, too, Adrienne, I think one of the important things when we think about team and culture and diversity is that women should not be thought of as minorities, right? We are representative of half of the population of the world. And similarly, you know, for folks that are working on solutions and they look at solutions that are targeted at minorities in the sense of Black and Latinos and Asians and all of that, we are not minority because the demographics of our world is changing. And so we have to stop looking at these as niche, and that, you know, we are bringing one person to people just to be representative. We need to do more than that.
So I did want to pick up on something that Adrienne said, you know, and it's interesting, which is this idea that when you can identify the diverse talent, you know, that diverse talent, whether or not be on, you know, as a, you know, VC partner, whether or not, you know, you're actually at the VC, whether or not you're on the board of company or the like, there's a little bit of an extra responsibility that's put on your shoulders. Now, I think there's a very good argument you can say, well, that's part of the value proposition of those people, because they can understand different cultures and identify, as Chinedu said, certain kinds of overlooked market opportunities, an issue that I'll get back to shortly. But there is at the same time, very often, particularly, and we'll talk about this in our next panel, when you get into Silicon Valley, this reticence amongst a number of VCs, a number of very high profile VCs, to even mention race as if it doesn't exist, and to frankly pretend as if it's not having an impact in the business world, and that it could impact product design and the very operations of a business. I mean, do you get a sense, Kabir or Chinedu? I mean, when you guys go out west, perhaps, is this conversation, does it sound different out there than it does when you come out, to the East Coast, or for that matter, even internationally?
Yeah, I think that what we are seeing a lot now can be summed up as sort of this reactionary knee-jerk response. There's a lot of that's going on. Chris, I think in one of your write-ups, you said, I believe in the goodness of everyone, so do I. So I also believe in the goodness of everyone. And I think these are good starting points. And that was the point I was trying to make earlier. I think we have to go beyond that. We have to, 100%. And that was the culture point as well. I think we can't expect, the Black partner to be the torchbearer of racial equity at the firm. It just that cannot be the case, and we have to change the culture. We cannot expect the Black board member to be the torchbearer of change at that firm. That's our orientation. That is very easy to say, extremely hard to execute on, extremely hard to make real, but that's the direction we need to go in. So I see a change, and internationally, very quickly, what I see internationally is not enough, fundamentally. I think internationally, there's been a focus on female founders. If you're investing in Africa, is it an African entrepreneur, or is it someone who's transplanted there? In India, there are other dimensions of diversity that are significant around religion and educational background and so on. So there has been this push, and we are part of that community, but it's not as aggressive as we would like to see it. And even though the Black Lives Movement, as we know, is a global movement and has sort of pushed certain cultures to a tipping point. In India, for example, the Fair and Lovely brand, this sort of emphasis on fairness as equals beauty is just 3 days ago got rebranded. It's still a horrible brand, but it got rebranded. I think that it suggests, right, that we are sort of the ripple effects are going all over the world. So I'm hoping that they will add up in the investment world in a similar way.
Yeah, I would double down on that. I think we're in a place where people are reevaluating the first order thinking around diversity, especially in venture capital. It's on both coasts, I would say. So whereas, there's, I would liken it to like micro VCs. Initially, when micro VCs popped up, there was a few of them. And then people thought they were a fad, that they couldn't work, the economics didn't make sense. And then now people evaluating sort of diversity themed or focused funds were saying the same things around 2015, when Arlen Hamilton and Harlem Capital started making serious inroads. But what I would say is I'm gonna finish with 2 points, that people are refining their thinking around it. And it's sort of like what Theo was saying, that people are looking at the dynamics of when you invest in women, you think about the diversity lens. If you want to think about diversity lens, invest in women or people of color. And you will say it's refined to say, well, there's people of color all around the world. There's women all around the world. So why wouldn't this market opportunity wouldn't be just the 30 million Black people in America? Why not the 90 million Black people in Brazil, or the 100 or 200 million people in Nigeria? So people are refining this thinking and leveraging the technology tools that allows it to happen at scale now that is different than probably previous eras. So that's one. But I think the second part that I always think there's something missing. And I think the something missing in people's evaluation is the historical context that diversity has led to great results in venture capital. And it's because of the sort of erasing of the history of, if you don't cover when VCs make investments into Black founders, if it's not covered, then the story isn't told, then it's not remembered. So then we get into a cycle where people start coming in at this like it's new. But, you know, in DC, the legendary firm Syncom sort of started out Black venture capital and birthed names that everyone sort of already knows, like BET, Radio One, which is now Urban One, is a publicly listed company. But the story of Syncom and the fact that Black VCs took a bet on a woman and then a married couple in launching those two businesses that are wildly successful isn't really known. And I think those that is what's that's an element of what's missing in the sort of dialogue around diverse VCs and the sort of evolution on both coasts.
So I'm going to get.
I think, sorry, because part of what I think your question is getting at too, right, is there are these cultural differences certainly between the East and West Coast. And the East Coast, I think because of the diversity of industries and some of the age of industries, law firms, investment banks, advertising, fashion, right? They have been grappling with this diversity issue for a far longer time. Not to say they've achieved the results they should have or that they've wanted, right? But talk about women and people of color in investment banking has been going on for decades, right? And so I think people on the East Coast tend to be a little bit more attuned versus what we think of as younger industries, right? VC, even though it's been around for a long time, right? Its popularity, its size has changed recently. And so now they're grappling with these things anew, justified or not. And so I think that also probably accounts for a little bit of the difference. Same with Europe, right? Where they've been thinking about women on boards for far longer, right? Other things like that.
You know, I want to sort of take that line of thought and sort of transition to the fact that this is a fintech conference, you know, and we're talking about, you know, VC in the context of fintech, and we're talking about George Floyd, you know, in the context of fintech. I had a conversation yesterday with Gene Ludwig, and, you know, I told him, I said, you know, one of the interesting things is when you think about fintech is deals with the customer. I mean, lots of what fintech does, especially when you get away from the pure sort of clearing and settlement stuff, is consumer facing. It's the, you know, many of the products are inherently consumer facing. I mean, so many of the innovations come down to how do you redesign and rethink the very concept of money. And money is the ultimate consumer-facing product. Everyone has to deal with money, you know, even if you don't have money, you have to deal with money, right? And when you think about what fintech does and financial innovation and frankly, the narrative of fintech, which has always been to democratize access to capital, to democratize financial services. You know, I mean, it's literally embedded in at least the programmatic DNA of fintech. And then you think about why that's the case. It's because you want to democratize things by scaling it, by making sure that, you know, it solves this weird paradox of both being scalable, but also customizable to people, making it real and making it effective to people on the ground, despite their very, very different sort of circumstances. You would sort of imagine that, you know, in the very product design of many financial services, many fintech, that you want to have input and you want to have ideas in the design. I mean, Theo, I mean, when you think about the kinds of both ventures you've backed, the kind of value proposition that you've had, you know, like, how do you think your perspective comes into play at that stage, right? You know, when you think about what kind of product and what kind of value proposition you know, your thinking has, your added value has when it comes to coming in on deals. And Adrienne, I'd also like you to chip in there as well.
That is an interesting question. So I'll share something I saw tweeted out by a friend of mine in the UK yesterday. She said, just because you create an app and then give someone a credit card doesn't mean that you're actually improving financial inclusion. That is not financial inclusion, because you're doing exactly what you had always done, just with a pretty card. And just because you spend 50 pounds to create a metal card and give it to people, you can't say that is innovation, because that is not. In by itself, Chris, as you say, fintech, the premise of that is to provide services to people that otherwise didn't have access to what they had before, right? And we cannot make pretty things prettier and say, here you go, this is innovation and this is fintech and this is us addressing the needs of the market. I think that's one thing we need to change. And if we think about why that is, you can look at the homogeneity of a lot of the founders, right? They all look the same. They're all backed by the same VCs that look the same as them. And so they end up creating solutions that all look the same, that address a very, very small niche market. The startups that we work with, they tend to be, we look at different verticals. So one of them is longevity. So they tend to be older entrepreneurs, not your 20-something-year-old that you find in Silicon Valley. They tend to look at solutions that are important to us as a society with a purpose, such as how do we make sure we can use technology to protect the assets of people as they get older, right? This is not something that we typically think about. Normally in fintech, you think about asset accumulation. You think about, oh, here's a credit card. Here is a different way to get money. Here's a different way to pay money. That doesn't really change anything, right? Buy now, pay later doesn't really change anything. It's been there for a long time. But one important thing I want to get to is, I think that comes back to education. And that's something we don't talk about enough. We need to provide different pathways for engineers to get into engineering, not just your traditional four-year college, because we have a lot of kids who are very talented. They just don't have access to the same education that a lot of other kids have. So can we create different ways for people to get an AI education, to get machine learning, because these are the fundamental that brings into product designs, that bring diversity in thoughts, as what everyone has talked about. And the other one, right? Yeah, and the other one is education in terms of getting people to understand what we had done before that lead us to where we are. So for that is a quote that you wrote that resonated with me so much that I have to repeat it. You said in your blog, you say, if fintech fails to innovate where it counts the most, it will be doomed to repeat the failures of the very system it seeks to replace. And that's exactly where we are right now.
Well, I'm not going to argue with myself, but
it was a beautiful post, Chris. Like, I have to share it.
Well, thank you. I do think that, a lot of times where, you think again about sort of the value proposition, of diversity, of thought, when it comes to fintech, I always joke to people that when I look at fintech, when I go to Silicon Valley and everything, for me, I see Adidas before Run DMC. Right. It's like I look at a field that has a lot of potential. And it's really interesting. But so much of that energy and the innovation energy is focused in this idea of frankly, the technology in and of itself as the sole source of disruption. Where, the browning of the country, the demographic changes in the country, that's another form of disruption that's coming down the pike. Adrienne, maybe I'm going to, because you had noticed the difference between the East and the West Coast, where you have the older industries that have thought more about race and have thought more about gender, more so than the West Coast. I mean, how does that come into your thinking about the value proposition of having Black people as venture capitalists?
Yeah, I mean, I think, like I said at the beginning, we don't have data, to Chinedu's earlier point, in VC about the value of diversity, but we have it in other industries. And that information, that knowledge, that experience is transferable. We just need the will to do it. And I think to your earlier question, then it becomes incumbent upon individuals. So you've got the female board member, the Latinx investor, whatever it is, and those things can start to snowball. So for me, I think it's really pulling from my experience on the East Coast, right, both on Wall Street and in government, and then bringing that to the things I've done on the West Coast, whether it was in starting our company, which is now a large company, and making sure we were hiring women and people of color, making sure that we were thinking about that in our board and our advisors, and now with the VCs I work with, right, making sure they're tracking these things. You just take the lessons that are hard fought, from older industries and apply them to this industry. And we know from those industries too, like sometimes you just have to make the decision. I am not going to make this hire unless it is a woman or a person of color. I am not going to make another, out of the next 3 investments, 2 of them have to be like, you just have to set those rules for yourself. And all this bunk, I hope we're past it, but all this bunk about that means you're going to sacrifice quality, we know is BS. Right. And so it just means people have to buckle down and do it. There's just no other way to get around it.
Well, on that word, I'm going to go and we're going to shift to our next conference. Thank you, our panel. Certainly, as we will discover and discuss throughout the day, innovation means you have to have differences of ideas in order to really think outside the box. It's hard to do so if everyone's thinking the same way. And I appreciate your points enormously. So we're going to shift to our next panel, but thank you again.
Thank you, Chris. Thanks, everyone.
Thank you, Chris.